Foreign investors taking their money out of China. From April to June, there was a drop of more than $15 billion in direct investments on China's balance sheet. So it's the time to get out of China. Let's bring in David Riedel, of Riedel Research Group. David, is this number surprising to you?
Not really. I think a lot of our clients certainly have been looking at other growth opportunities around the world. I mean, if you think about the China story as it's been for so long, it's been urbanization, rise of the middle class, expanding consumer, so on and so forth. But unfortunately, in the last few years, we've been reminded of Beijing's heavy hand on the tech companies, the changing demographics there, the inability to actually put together a stimulus package that works. So I think emerging markets investors are realizing that the long term for China may not look so bright.
David, I know you've also spent a lot of time focused and investing in India. So there's no question that that is really the demographic story that people would want, and there's certainly a growth story. But it's priced that way, and you know, China is very cheap here. And I see that you actually like Tencent and Baba. So how do you weigh that? I know you're not a trader, and I know you care deeply about fundamentals and do that kind of work. But they both kind of have things that make them attractive here.
You know, the Indian market is expensive, and it always has been. You know, they've got a very strong domestic investment market like they do in Chile, of course, and you and I have talked about this in the past. You know, they like to buy their domestic stocks. So there's a lot of demand for Indian stocks, both domestic and foreign. China stocks are cheaper, and I think for a reason. People have been reminded, you know, China saw its population drop 2 years ago and drop again next year, the next year. They're facing a demographic crisis that other countries around the world simply aren't. And so that facing a demographic crisis really takes away one of the pillars of why you invest in emerging markets, right? You're looking for that good long-term tailwind story. And I think in India, people are willing to pay a little bit more for it because they see the government changing and evolving, the tax structure evolving and improving, and the demographics are there to back it up.
You know, David, for 10 years, we've been talking about China as this engine for growth. That GDP print was obviously very disappointing. There's been a lot of stimulus over there. We've obviously had a lot of reshoring or the focus on not being so dependent on China. But when you think about that demographic issue that you're talking about, supposedly in a few decades, they're going to have under 1 billion people. How does China remain this engine of growth? And who would actually pick up the baton? Is it India?
You know, I think a lot of things that happened around COVID and since then have reminded people about the benefits of having closer supply chains, the benefits of having manufacturing near your markets, avoiding things like long shipping lanes and things like that. And I think that China never really recovered from people diversifying away from China during COVID and thereafter. So I think India has some benefits. Of course, it still has many of those challenges of transportation and so on and so forth. But demographics really takes the play here and underpins a good long-term story for India. I think it could surprise to the upside, even from where the pricing is today.
Shorter term, though, David, it sounds like you like technology in China. That could actually be a bright spot. I mean, if you even just think that, you know, Apple needs an AI partner, that should lift whoever they choose to partner with in terms of providing that AI aspect, you know, product to them.
Yeah, that's exactly right. I mean, as China stops becoming the sort of the large factory, thousands of workers kind of Tencent sort of manufacturing powerhouse for the rest of the world, they need to build smarter. They need to employ more computer technology and more high-end manufacturing and so on and so forth. That all takes the tech brains of Baidu and Alibaba and Tencent and all these other tech companies that we've gotten to know over the recent years. So I think the benefits to them are partially driven by the demographics. And also, I think you've just got a near-term trade here. If we get bad numbers on Thursday, I think that'll remind people that Beijing could still have some stimulus in order to achieve their 2024 goals. I worry about 2025 and 2026 as the market looks back at this and says, you know what, demographics are shrinking. It may be time to take a different look.